look at trade example number 2. So I've got a chart open here of the pound dollar, a daily chart, and I've applied a percent swing chart overlay here. And we can see that the properties, we have 3 bars and 3%. And I've turned the training mode on. As I mentioned before, the percent swing chart overlay can give us an idea of when we can see Gartley patterns. And if we get down to the bottom here on the pound dollar, this looks like a significant low. It goes up. There might be AB equals CD symmetry here. So what we'll do is we'll apply the analysis to the chart and then add bars as we did in the last example. And like I mentioned, the hard part is finding these things before they finish. So right now, this is not quite complete. It might be one of these 78.6 TRG Gartleys, but because this is 4x, we don't know what the volume is. We can't apply that to the bottom. But as I mentioned before, you can also look at the currency futures contracts to see what the volume is like there, and that can give you an idea of what's going on here in the spot market. But let's just call it a TRG 786 less the volume. We see that it's been going down, made a low, and this swing here is bigger than these previous swings in price and time, so we're thinking that this might be a significant low right here. So let's apply our retracements and extensions to see what we've got. So we'll apply the price retracement, turn the lock on, low, high, drag it across, and then we're going to do our extensions, price extensions from here to here. AB equals C, and this is hopefully the D point right down here. So as our extension numbers right beside the 786, we can clean off the other Fibonacci retracement levels. So let's do that under levels. Okay, so as this is a TRG 786, our rules are that we'd be a buyer at the 786 number and then put a stop below this low here. And to calculate our targets, we can use the single and scale out targets that we find in the Beck's toolkit. If you need to move the chart up, you can just grab the price scale here and move it up and down. It does lock the price scale. If you want to unlock it, just click this lock here. So just do that. So we know where our entry is going to be 138.14. Why don't we put the single and scale out levels in here? So we go to tools, go to Beck, single and scale out, and we say we're going to be a buyer at 138.14. And where do you want to put your stop? Down here it's 95. I would go with, say, 88. Drag that across. Okay, now we go in here and confirm our control points. Entry point. Our entry is 138.14, so let's make sure that's the case. 138.14. And our stop, we wanted it 134.88. 134.88. There's our stops and there's our targets. And I might want to change this here so it has, and change this so it shows the price all the time. And if I want that to be the default, you can just select the tool, and go here, save settings as default. So every time I open this now, it's going to show the numbers, which is a lot easier to deal with. Okay, so now that I got everything on here, I can turn off the price extension and retracement there. So now we just have the entry signal right here, our stop, and our targets. If we wanted to fill out our sheet, we'd put in the date, our entry price, and these numbers for the targets and the stops. We already know how to do that from the previous video, so why don't we just add some bars here and see what happens. So I'll set this to be 1 day at a time. So let's add some bars. Okay, so we would have been filled right here at 138.14. Okay, now we're long 3 pound dollar contracts on the daily. Put our stop down here. And we haven't really talked about money management that much in this video series, but I talk about it extensively in the Gartley trading method book. So if you want some more detail, go there. But we have to calculate how much of our account size we're going to risk on any one trade. So it's really important that if you have a big stop like this in Forex, you make sure that you got enough money in your account, and if you don't, make sure that you're trading micro contracts or mini contracts, and just make sure that you're not risking X amount on any one trade, whether it be 3%, 5%, whatever your trading plan states. Okay, so we're filled. Now we put a order up here at 139.77 to be a seller of one contract on a limit at 139.77. And you're going to put a stop down here, and that's going to be a sell stop at 134.88. So let's add some bars. Okay, so let's see, did that hit our target yet? Let's find out here. So we just open up this info panel and we highlight that bar and we look to the right here and see what the high was. Scroll up here. Okay, the high was 139.72 and our target is 77, so it hasn't hit it yet. So let's add some more bars. Okay, now we definitely hit it. So we sold one contract at 139.77, and we're not going to leave the stop down here at 134.88. We move that up to 136.51. So selling two on a stop at 136.51. And now we have a new order up here to sell one on a limit at 140.140. So let's add some more bars. Okay, I'll turn off the percent swing chart overlay there. So now we've hit the second target. We sold our second one at 141.40, and now it's time to move our stop up to our entry price of 138.14. And so if we get stopped out at this green line here where we entered on the last contract, we're good to go. We've made money. It's okay. Ideally, we want it to go higher, but now we're going to change up the time frame. We're going to change the time frame from the daily to the weekly in accordance with our trading plan, and we're going to use a 3-bar trailing stop on the weekly to see how this trade works out. So leave the stop here at 138.14 on the last contract. Now we got the lottery ticket trade going on here. We're hoping for a big move, and so what we want to do is leave a big loose trailing stop. You're now a position trader. You want to be a position trader on the last contract. So this is what we're going to do. Let's change the chart to weekly. Okay, and if we're using a 3-bar trailing stop, we'd see that our lowest low would be way down here, almost to 136.51, but we're not going to put the stop way down there. Only when the 3-bar trailing stop exceeds our entry point. Once it goes above the entry point, then it's going to kick in. So I'll show you what we mean here. I'll turn off this, zoom in here a little bit. Okay, so let's apply the 3-bar trailing stop. So to apply the 3-bar trailing stop, let's go over here to Tools, Beck, X-bar trailing stop. We're going to go below here, and there it is. So let's just confirm, look at the properties, make sure, yes, it's a 3-bar trailing stop. We're putting it one tick below the lowest low of the previous 3 bars. So it's going to be automatic for us here. So it's down here. This is not where our stop is. Our stop is still here at 138.14. So let's add some bars. Okay, so it moves quite a bit higher, and our stop is still here. We're going to wait for this blue line to jump above the green line here at 138.14. Let's add another bar. Okay, now our stop, our 3-bar trailing stop kicks in. Our 3-bar trailing stop currently is at 138.41, which is above 138.14. The way it calculates it, it goes 1, 2, 3, lowest low, those 3 bars, 1 tick below this bar here is giving us 138.41. So now our targets, we can get rid of these if you want. We can turn those off. And this is our trailing stop right here. So let's just keep adding some more bars and see when we get stopped out. Let's make it a little bit bigger here so you can see what's going on. Okay, so there we go. You would have been stopped out at 163.40. Now, a lot of people say, hey, Ross, typically how long are you in a trade for? Well, in this example, you would have put this on in March, and you would have been stopped out here in August. Now, that's quite a few months, and trades like this don't always happen, but it is possible that you put on a trade and that last lottery ticket contract could be on for several months. And that's the dream come true, because that means you're making money. The longer you have this position on, the more money you're going to make. And so if you look at this, it's almost embarrassing how much money you would have made on this. To keep things real, if you haven't traded Forex before, I'm not even going to say what the numbers are because I don't want to press the greed buttons. I know a lot of educators do that, and I don't want to do that here. I want you to look at the reality of trading. Some things work great. Sometimes they don't, and this is one of the times when it really does work out. But I noticed that there's one that wasn't that great that happened after this. So let's have a look at that. Let's just keep on adding. I'll turn on the percent swing chart overlay again here and get rid of this X bar trailing stop. You would have liquidated that position. And let's just continue to add some bars here. Zoom out, because there was another, oh, we're on the weekly, so change back to the daily again. Okay. And okay, so there was our Gartley over here, and we got out around here somewhere. Now, if you look at this, there's definitely AB equals CD over here, and we got a big trend up. So I want to show you what happened on that example. Let's see what kind of Gartley that is. So we just back it up here a bit. Okay, this is definitely a trend continuation Gartley pattern. All right. And okay, so here's the one that we just did. It really took off from this point going forward. Remember, I talked about this a little bit before. If I'm going to be looking at a significant low to a high, which low do I use? This one or this one here? So if we had to pick between these two lows, this one or this one here, you have to ask yourself, at which point did it really take off and move higher? It definitely was not this one here. It came back and got down here, and then it really took off. As we could see with our 3-bar trailing stop, we got in here and wouldn't have got out until here when it started having a distribution pattern up here. So psychologically, it really started taking off from this point. So I'm going to use this as the beginning point of our trend continuation Gartley pattern. So from this low up to this high, let's draw some fib retracements. This low, this high, drag those across. Okay, and now let's do our price extensions. A, B, C, right there. Okay. So looking here, we can see that the end of the D point is landing right beside this price extension is landing right beside 38.2%. So this could be viewed as a TCG 38.2. So what we're looking for with this example is if the market, based on our trading rules, if the market touches this 38.2, we're going to use a 1-bar reversal to enter. And so what we'll do is add some bars to see if it touches this 38.2. Let's turn off the retracement levels so we can make it clear as to which one's the most important here. Okay, and for that matter, let's turn off the extension now that we know that that is a 38.2 TCG. Just one other thing I mentioned, I talked about this price interval tool before as well. Sometimes you can use that. There's a natural tendency for the market to hit double and triple levels from the initial impulse of a move. And so you can use that tool, the price interval tool, or some people call it the price expansion method. So let's do that. Let's measure from this low here to this high, the first impulse up of this sequence, this trend move here. Okay, so price intervals from this low to this high, and drag that across, and we can see that it actually, here's the double level here, and you notice it found support here. It's finding support here as well. But also if we take it to the triple level right here, it confirms that this is the high of this. If Elliott wave guys would say there's definitely a 5-wave sequence here. If you want to call it that, that's fine. Whatever it is, it's an impulse followed by correction, and the assumption is that the trend is going to continue. It's going to bounce off here and keep going higher. The price interval or price expansion tool just confirms that this is indeed a high. So I'll just turn that off. Now we're looking for the market to find, to touch 157.47. If it does, we're going to be looking for a way to get into this trade. So it's a trend continuation trade. Let's zoom in here a little bit, and I'll add some bars. Okay, so there we have it. It has touched it now. Okay, so I'll turn off the percent swing chart overlay, and we'll focus on this now. What we need to do is look for a 1-bar reversal to entry, and if we get filled, then we'll use a 3-bar trailing stop to identify the lowest low, most recent lowest low, to put our stop, and then we'll know exactly how much we're risking on this trade, and then we can set our targets. So let's do that now. Let's apply a 1-bar trailing stop, or we'll call it the 1-bar reversal, but simply go over here and use your X-bar trailing stop. And we're not gonna, we gotta go in here and change the period to 1. Okay, close. So basically what we're looking for is the market, we'll zoom in here a little bit more, turn off the crosshairs. I'm looking for the market basically go above this high here of this particular bar. And this line, if you have to use it, that's fine, but it's pretty simple. Just look for the market to go above this bar, and you can use one tick above. Let's say the high here is 158.93. Yeah, so put it in at 158.94. So let's add a bar and see if we get filled on that order. Okay, so we did on this big range bar. It went down, it made a new low, but it also went up and took out the high here. So it's called an outside bar. And you're filled at 158.94. So where do we put our stop? Well, let's move this along here. Let's get rid of the Fibonacci retracements now. So where do we put our stop? Basically, you could apply the 3-bar trailing stop here going long. It's going to tell you this is the lowest low of these 3 bars. Well, actually, this is an inside bar, so that doesn't count. So we go 1, 2, 3. Lowest low, those 3 bars is right here. So we want to go just a little bit lower than that. The low here, The low here is 157.09, so let's go to 157.03. Okay, so let's use the single and scale out targets and stops. Single and scale out. We entered here at 158.94, and we want to put our stop down here at 157.03. 157.03. Confirm that these numbers are good. 157.03 is where our stop is, and our entry point's 158.94. Okay, there we go. So we can get rid of this X bar trailing stop. Okay, so this is our entry point. The risk on this trade is based on the lowest low, just beyond the lowest low of the previous 3 bars. And you might go, well, where'd you get this number, 157.03? Well, remember the low here. We don't want to use 157.09 or 08. Don't use 1 or 2 points beyond it. Use a few more than that because everyone else in their dog is using that. And I also used 03 because it's an odd number and people don't like those numbers. So go ahead and choose a number that you wish, whatever you're comfortable with, as long as it's within your risk parameters. So there's our risk. The single and scale out has given us our targets. So let's add some more bars here. See how this works out. So this market went up and hit the first target. So now what we're going to do is move our stop from down here at 157.03 up to here. So we sold one contract here. We move the stop to sell 2 on a stop right here at this dotted red line. Okay, now we're looking to hit the second target, 160.85. So let's add some more bars. Okay, that's sweet, isn't it? So it hits the second target. Now where do we put our stop? We put our stop right here at the entry point. And now we're going to change the time frame to a weekly from the daily. Okay, so now we go over here, change it to weekly. And there's our targets. There's a big range bar for the week. And if we took the lowest low of the previous 3 bars, it's going to be way down here. But remember, I said we don't want the 3 bar trailing stop to kick in until it goes above the green line here where you put the trade on. So let's add some bars. Okay, there's another bar. Okay, let's turn off the scaling here and zoom in a little bit. And what we'll do is apply the 3 bar trailing stop. Go to Tools, back, X bar trailing stop, put the 3 bar trailing stop below here. It's way down here at 157.08. Let's add some bars. We're hoping that this blue line goes above the green line. Not yet. That's an inside bar. Remember, a 3 bar trailing stop doesn't count it. That's why it just stays flat here. Let's add another one. Okay. 1, 2, 3, lowest low is still there. Okay, now it moves up finally. Okay, 1, 2, 3, there's the lowest low here. Add some bars. Just about. Inside bar. Okay, so we got stopped out at 162.73 on that. So compared to the other trade, you know, if you look at the big scheme of things here, remember that other one we got in here and got out over here. This one, not as sweet. In fact, if we turn off the training mode, see, you were long and it eventually went down. But it doesn't matter. We made money on this trade, right? We hit the first and the second targets. We thought it was going to be a trend continuation going higher, but I like about this style of trading, if you want to make money even when you're wrong, start trading like this, because this is one of the things that really helped me with the Gartley patterns. You got to marry the good money management with the Gartley pattern, and that's really what makes the difference. Using the single in scale out method along with 3-bar trailing stops is a very mechanical, disciplined way to put your trades on, and it doesn't matter what market you're trading. And you'll get into situations like this where you're buying in this general area, which ends up being a high in the big scheme of things. You know, it went down here and dropped a huge amount. But we still made money. We hit the first and second targets. We managed our risk, and then we had a 3-bar trailing stop, and you would have been just fine here. So that's example number 2. Actually, we had 2 examples in number 2 here with the pound dollar. But there's different ways to find these Gartley patterns, whether you're scanning for them, visually trying to find them, using the Gartley pattern identifier, all these different ways. Find out what works for you. Write that into your trading plan so that you're consistent every day with the method of trying to find these patterns. And don't give up. Your patience will be rewarded handsomely if you keep on looking for these high probability patterns. So now that we've looked at a few different trade examples, I'd like to quote Axl Rose from 1987 when he said, "Where do we go now?"